All right, welcome everybody to our webinar today, which is on SMSFs, property and loans. And thank you very much for joining us today. I'm excited because I have two very special guests with me. I have Ashleigh Goodchild, who is our property expert, and I have Catherine Borromei with me, who is also our loans expert, and I'm going to introduce them in one moment. Before we get started, just wanted to run through our quick disclaimer, which is basically that in today's webinar, we won't be giving any investment advice, which means that none of the material that we discuss today has considered any of your personal objectives or circumstances. It's general information only. So before you act on any of this information, please do your own research and also go and get personal advice from a licensed advisor such as myself. Also, just wanted to mention that in today's webinar, we're not going to be considering complex transactions such as property development. We're going to be keeping it to the basics of property SMSFs and loans. And we're also not going to be considering other structures such as unit trusts that you could use. So I wanted to go ahead and introduce my first guest, who is Ashleigh Goodchild. Now, Ashleigh is an expert in property. She is quite often quoted in the media. She's often asked to commentate on property issues. She has a wealth of knowledge, and I'm very excited to have her on board today. So can you go ahead and say hello, Ashleigh?
Thank you, Susan. Thanks for having me. And yeah, I specialize a lot in the investor market and trends that we're seeing not only in WA, but also around Australia as well. And I do a lot of webinars with on-the-ground investor updates. So not just WA, but definitely Australia-wide.
Excellent. And my second guest today, I have on board, I have Catherine Borromei, and Catherine has been around in the loans specialty department for a very long time. She has decades of experience, particularly in the SMSF specialty, which is something, if you are looking for a loan in the SMSF with the SMSF requirements, you do want a broker who has that knowledge and experience. I also have no hesitation in recommending clients to Catherine because she does have that integrity and she also has that personalized service that we're looking for. So can I introduce you this morning to Catherine, who also, I might mention, is Ashleigh's sister.
Thanks, Susan. Thanks for having me. I've been broking for more than 20 years now, and I do self-managed super funds, investment loans, and owner-occupied loans too. So I've been around for quite a while. I've seen the changes in finance over the years, and the major lenders come in and out of the space of the self-managed super funds.
Perfect. So thank you very much. Let's kick it off. Let's get started. And I'm just going to talk first off about, basically what is an SMSF? So we've got a lot of listeners on this morning. Some do have an SMSF, some don't have set up an SMSF. So an SMSF is basically a privately managed super fund. So it's where you roll over your existing superannuation benefits from your industry or your retail fund, or you put in a large contribution to get started, and you privately manage that super fund yourself. You then get to choose basically what you're going to invest in, and you have control over your own investments. And one of the popular investments is, of course, property. And given the uncertainty in the economy, and this is one of the things Ashleigh is going to talk about, property is a tangible asset and does continue to remain very popular. It is an allowable investment for an SMSF. And one of the things I talk about with clients is the tax rate in an SMSF is very low. And it's one of the reasons why, you know, people do set up SMSFs. The tax rate that the income and capital gains are taxed at, the tax rate is basically 15%. If you make a capital gain that you've held on to for more than a year, the tax rate is only 10%. And then once we move into pension phase, everything is basically tax free, except bearing in mind if the legislation comes in that might be capped at $3 million. But basically everything will be tax free. So it's a very attractive, still the most attractive tax structure that you can get. And that is one of the reasons why property is so popular. So the things that we have to cover off on is we have to basically abide with the super laws, which are contained in the SIS Act, the SIS regulations. We have to meet the sole purpose test. The sole purpose test basically says that you have to invest only investments for future benefits. You can't take any immediate benefits. You also have to abide with the fund's trust deed. So a good trust deed from a good lawyer will be wide enough to include property investments. So you need to have basically a trust deed that's updated basically every 4 or 5 years, needs to be up to date. A good one, of course, will allow you to invest in property and take on borrowings. You also need to have what's called an investment strategy. And your investment strategy will be specific to your fund. It will say, yes, you can invest in property. Yes, you can have a loan. And it will specifically talk about, you know, the investments that your specific SMSF is making. The last thing to mention is the ATO in 2019 started looking at really honing in on SMSFs that invested in property with a loan where over 90% of it was concentrated in that one specific asset. And they didn't like the fact that they were overly concentrated in that one specific asset. So they had what was called a lack of diversification. Now, there's no reason why you can't do that, but you just will have to have extra documentation in place. So just covering off on that. Now, I'm going to go across to Ashleigh because I want to ask Ashleigh, I want to bring Ashleigh in and I want to ask her, as far as the property market goes, what are your observations at the moment, Ashleigh? Has investing slowed down or are people still investing in property?
So 6 months ago, definitely saw it slowing down with the investor activity and the buyers agents buying in Perth. We have, though, in say the last 3 or 4 weeks, started to see them coming back into the market. So definitely picking up again. And I think what's changed in the investor market is that back in the day, we only found that we had mum and dad investors and, you know, just people having one property. And then when everything changed and we started picking up in the industry, we started getting people more educated and investors buying multiple properties and creating portfolios, which is not something that we've had in the I've been in real estate for 25 years and it's not been in my lifetime where there's been big portfolios being built and created. So what we found is that our clients now tend to have multiple properties and they tend to buy their first couple in their personal names, but they definitely diversified their portfolio structure. So now we are definitely seeing an increase of my clients coming back into the market, actually specifically buying under a self-managed super fund because they've exhausted their other capabilities. So, you know, these people are buying, the people that are entering the market again now quite often are buying their second, third or fourth property.
Wow, yeah, that's interesting. And can you give us your insights? What sort of investment trends are you seeing in Perth and as well as interstate?
So in WA, when we started getting all the interstate investors, it was always the stock standard 3x1 or 4x2 home in the outer suburbs. Then when that became a little bit more unaffordable, they moved to the regional markets, so to the Geraldton and to the Bunbury. Then we found that it's come back now to villas and townhouses on smaller blocks of land. So still not buying in a complex where there's a lot of strata levies, but definitely duplexes, or maybe where there's 3 or 4 in the complex. That has definitely picked up because the cash flow is really good for those ones and the yield. We are finding now in the last month, the activity that's come through is actually for more of the newer build, which is probably matching why they're buying in a self-managed super fund, to be honest. But we're definitely finding, like, on the hit list for investors, I've had Pearsall and I've had Yanchep and I've had Champion Lakes in the south. And so those have been the most requested suburbs at the moment.
Yeah, I was going to ask you, what suburbs are trending. So, that answers that question.
So what we found in those suburbs, in those 3 specific suburbs, they've sort of had that 59 to sort of 65% growth in the last 3 years, which is probably considered, even though it's high, it's actually probably considered low in comparison to other suburbs like in the Rockingham area, where they've had 80 to 90% growth in the last 3 years. So yeah, so Yanchep, Pearsall, Champion Lakes is currently around 60%, 65%. So that's where I'm finding my people are buying at the moment anyway.
And in terms of types of property, because as far as SMSFs go, we do actually have a mix between residential and commercial clients. Can you give us any insights about commercial versus residential properties?
Yeah, I think commercial, I'm finding my typical investor who wants to have 5 properties in their portfolio are definitely still feeling a lot more safer with resi. I'm finding that the more experienced players, more the buyer's agents, or there's another layer that actually starts converting that into the commercial market. My clients don't tend to touch the commercial market a lot at the moment. But saying that, I have had a couple of whispers of clients who are selling off a property that they've done very, very well with, where they've maybe bought a property down in Rockingham that's doubled in the last 4 years, and then putting that money in and trying commercial. But I sort of find that from the discussions my clients are having, they're still not confident with commercial. It's like, oh, we're just going to give it a go because we've done quite well in resi. And it's like they feel like that's like the next step up in their journey. But I personally don't see a lot of that commercial space at the moment. I mean, I think resi is, for me, like, I own commercial as well. But resi for me, there's an emotion in it. It can sometimes serve another purpose. So a lot of people, when they're buying property, they might be buying it for the financial benefit, but they also might have in the back of their mind that it might also benefit their children when they get older, or maybe it'll benefit, maybe they want to live in it one day when they retire. I guess it feels easier to transact and have multi-use with residential. And I think that that's where people feel that safety net, that there's lots of ways that resi property can service you, or you can get a benefit from.
Yeah, I think that's true. And from what Ashleigh's saying, I mean, the clients that we get who are buying commercial property, it's usually, I'd say 99% of the time, it's because they want to actually rent that commercial property to their own business. You're not often seeing, it purely from an investment point of view. So, her comments are, very valid. Whereas residential, you will see it purely from so it's kind of that that unknown quantity with commercial. So yeah, and Ashleigh is does have such a, vast experience. So if you do have any questions for Ashleigh, just pop them in. There's a Q&A box. Just pop your questions in the Q&A, because we have allowed 15 minutes at the end of the session. So if there's any questions that you do have for Ashleigh, put them in the Q&A box, and we'll answer them at the end of this webinar. So we're just going to have a look now at the rules around purchasing property, so we get an idea of what you can and can't do in an SMSF. So as I mentioned, property, it is an allowable investment within an SMSF. Now, there is restrictions around purchasing property within an SMSF. The main rules that you can get caught out are what's called the related party rules. So basically, within an SMSF, you can't transact with a related party, and yourself and a related party can't have any present benefit from any asset. So there's these related party rules that you have to get over. So when we come to property, we do ask the general question: can I live in a property or use it for personal purposes? And the answer is it depends, and it depends on the type of property, because there are a number of exceptions. So when it comes to residential property, it's basically a hard no. So in terms of acquiring property, buying property, we can't purchase property from a related party. We also can't live in residential property that's either owned by ourselves or owned by a related party. We can't rent it to a related party. So residential property is basically out. When we get to what we generally know as commercial property, but the technical term, and during this webinar, I will use terms that we understand rather than technical definitions, because I want to make it as easy to understand as possible. But the technical definition is business real property. So when we're talking about basically commercial property, we can buy that property from a related party. So if you owned business real property and you wanted to buy it, your SMSF wanted to acquire it, you can do that as long as it's at market value. So you'd need to get a valuation. Now, the definition of business real property is basically that you have an eligible interest in it. So it's either a freehold or a leasehold interest, and it's used wholly and exclusively in one or more business. So it doesn't have to be used in your business, but it has to be used in one or more business. Now, as far as renting a commercial property, and this is where the exception comes in, you can rent it to your own business, but you must have a lease that is at commercial terms. So that lease must have all the same conditions that you would offer someone else who wasn't related to you. And it must be at market rent. So you must have that market appraisal, and it must have, the same conditions. So you must pay your rent on time, all of the same conditions that you would offer an unrelated tenant. So that's as far as commercial property goes. So you can see the different types of property determines what you can and can't do. Now, commercial property, you still can't live in it. So you can't live in it, and you can't have a related party living in it. Now, the one exception is if you have a farm. So if you had a farm, there's a carve out where on 2 hectares of that, you can actually live on it as long as it's being used for primary production. And we do see that happen with clients sometimes, where they've got a farm, they live on the 2 hectares as long as it's being used for primary production. So that's the difference with the different types of property and what can be done with them. And it does make a big difference to make the distinctions. Now, the other thing I want to also just address is it's very important when you are purchasing property, that the property is purchased when you sign the offer and acceptance. It must be purchased in the correct name, which means when you write the offer and acceptance, you must put the correct name on the offer and acceptance. And unfortunately, it's very common that we see that people put the wrong name on the offer and acceptance. For example, people put their personal names. I don't know why this happens, but it is quite common. Now, the issue is it's not as simple as just changing it when you realize you've made a mistake. So, for example, they might send the contract through to me and I say, it doesn't say the SMSF name anywhere. And they say, oh, I made a whoopsie, I'll just change it. It's not that simple, because the stamp duty office views it as when you change the name from your individual names to the SMSF name, you have now transferred it from yourself to the SMSF, and that's another stamp duty transaction. So you may end up paying double stamp duty, which is a real issue. Now, in that situation, and I'll also make accountants aware, us as accountants, we are not lawyers. We cannot give an opinion on a legal contract. Also, we are tax agents. We can give advice on federal law. Income tax is a federal law. We cannot give an opinion on state income tax. Stamp duty is a state estate tax. So we can't actually give opinion on that. So all I can do is draw your attention to it, but you need either a lawyer or a conveyancer who's also a lawyer to sort that one out for you. We cannot sort it out for you. But it is a very serious issue that happens way too often. So please check that you put the correct legal name on the offer and acceptance. It's a big issue. Now, when you also, and I'm going to go across to Catherine because she's our loans specialist today on the webinar. When you have a loan involved, you also have another legal entity involved, and that will change what you put on the offer and acceptance again, because you also have to put that legal entity onto the offer and acceptance. And I'll discuss that after I've talked to Catherine about a couple of things. So I want to go across to Catherine, and I want to ask Catherine, these are when I have a client come in, and bearing in mind that we don't give an investment advice, so they say they want to buy property in their SMSF, and we talk them through that. We just guide them through the compliance aspects. Then they mention that they want to borrow money, and we recommend they go and see Catherine. Now, the three most common questions that they ask us, we tell them they have to talk to Catherine about. The first one is, how much can you borrow for different types of property? Or how much can you borrow? That's what they ask me. So I'm going to go across to Catherine, and she's going to give us the answer to that.
Thanks, Susan. Look, generally speaking, most of the lenders will lend you up to 80% loan to value ratio against a residential property, and commercial, they will loan up to 70%. That is really dependent also on location, postcode, and the property type, of the security type. Sometimes if you're looking at property under 50 square metres, for example, the lenders might reduce the loan to value ratio if it's in a high rise, or if it's down south or in the country. Also, that could affect what the maximum borrowing, both for residential and commercial, that they will lend to you. How they assess your serviceability in the self-managed super fund. They have a look at what your contributions have been in the past 2 years, plus any anticipated expected rental income for that property. So they're the main ones, is 80% for residential and 70% for commercial. However, there are some lenders that could consider higher, 90% for residential and 80% for commercial. but there would always be a risk fee involved in that. So it is possible. It's just really dependent on the strength of the application and the strength of the self-managed super fund.
Yeah, and that's great. And I'll just add to that. I always have the discussion with clients, just because the bank says that you can, or the lender says that you can lend, 80 or 90% doesn't mean you have to lend that amount. The lender is obviously, in the business of making money. So, the more they can lend you, obviously they weigh it up on a risk basis as well. So they're not going to, lend you more than they think that is a risk. But you have to bear in mind with an SMSF as well, take into account the length that might be vacant for. If it is vacant, you may be in the position where you have to put in extra contributions. So I like to be in a more conservative position. And, that's always the kind of like where I lean with my clients. So, yeah, that's as an advisor, but yeah. Now, next question, very common question. So you've got a property in your SMSF already. You've got a loan. You've paid down a good majority of that loan already. Can you now use that equity in that property to get another property with another loan?
No, you can't. You can't cross-securitize the properties. Also, once you pay down a self-managed super fund loan, you can't redraw on it. There is no redraw access on it. If you were wanting to save interest, there are some lenders that now offer offset facilities, both on residential and commercial self-managed super fund loans. So rather than paying it down directly, you would hold your funds and the extra money in the offset accounts. But you cannot cross-securitize the properties at all or use that equity to purchase another property.
Yeah. And if I can just add to that, in an SMSF, because of the way that the legislation is, and I'll talk about it after Catherine's finished with the questions I've got for her, but the way the legislation is, it's one specific acquirable asset per loan. And for that reason, you can't basically, you have to have one loan per asset. So you can't draw out the equity on, one loan for another asset. So there's a few funny quirks with SMSFs. You also, you can't redraw because it's seen as taking out another loan. You basically take out that loan, you have to pay it off in entirety, pay that out, and then you could basically take out a whole new loan with a whole new asset. But yeah, there's no opportunity to basically use that equity, and it's because of the way that the legislation is, which I will actually demonstrate and show you, so you have a better understanding. But yeah, it's just one of the quirks with SMSFs. Now, next question, which we do get asked a lot as well. So with your SMSF loan, right? You get an SMSF loan. With that, when you're getting that, you basically get assessed on the contributions going into that loan, and the bank decides, whether they're going to give you that loan. So normally you get assessed on employer contributions and the rent to pay back the property, and they'll give you a loan. Does that then affect my ability, if I want to go and get a loan in my personal name to now buy my own home loan, is that going to affect my ability to borrow?
Generally, it won't affect your borrowing capacity personally, not directly, but because it sits within a separate legal and financial entity. There are some, if you are making larger contributions on top of your employer contributions to your super fund, and to make that so that it is servicing a loan that you've got in your self-managed super fund, then that's when it could actually affect your borrowing capacity personally if you are having to make those larger contributions to your fund. Yeah, and I mean, that's when it would, but generally it won't, but you will personally provide a guarantee for that loan as well. So you've got to factor that in, that you would need to get legal advice on it. And you can make other contributions even by borrowing against your personal property to contribute for a purchase within your self-managed super fund. But again, we would always suggest that you get legal and accountant advice on that.
Yes, and that's a great point. So yes, whenever I've not seen one yet, whenever you get an SMSF loan, the bank will always ask, or the lender, I should say, will always ask you to give a personal guarantee. So yeah, you've always got that in play. Now, I'm just going to go through, yeah, we're doing well with time. I'm going to go through and explain the actual structure to put a loan in place when you've got an SMSF. So hopefully we can see this. Can we see this? Hopefully we can. So normally, if we've got an SMSF, now we set all our SMSFs up with a company structure. So we have a company, and then we have the SMSF, and the company acts as the trustee for the SMSF. Now, when we introduce a loan, we actually have to have a whole new structure as well that stands alongside the SMSF. So we have what's called a holding company. So we basically end up with two companies. So we have a holding company, and then we have what's called a bear trust. And the bear trust actually holds this property, our property, on trust for the SMSF until we pay back the money to the lender. And there's this LRBA loan. And LRBA stands for Limited Recourse Borrowing Arrangement. And Limited Recourse Borrowing Arrangement, basically what it means is that if the SMSF was to default on the loan, the lender here only has recourse to this one specific asset within the SMSF. So it can only go into the SMSF and ask for this one asset. It can't go into the SMSF and say, well, you've got cash and you've got shares, and it only has recourse to this one specific asset. Having said that, Catherine made a very good point. All of the lenders will ask for a personal guarantee. And I have not seen one where there's no personal guarantee. So that's basically the structure. And there's no easy way of drawing it because it is quite a complex. Now, when the loan is paid back, you have the option then where you can transfer, because the property will actually be in the title of the holding company. But when the loan is all paid back, you could transfer the property then into the name of this company, which acts as the trustee for the SMSF. Now, when I was talking about the name on the offer and acceptance, so if you were buying this property and there was no loan involved, you would buy the property in the company as trustee for the super fund. So it's quite simple. Now, if you buy the property in the name and there's a loan in place, you then have to buy the property in the name of the holding company as trustee for the bear trust, as trustee for the corporate trustee, as trustee for the super fund. That is the correct legal titles. So does that make sense? I feel like I'm doing a lecture rather than a webinar. So that is, yeah, that's basically the explanation. So it is quite technical. It is quite complicated, but SMSFs are quite complex and quite complicated. Now, because of all of that, it does give rise to a couple of quirks. Because of the way that the legislation is written, and because of this, the fact that you can only acquire this single acquirable asset, one title, one asset, it means basically we can't change the nature of an asset whilst the loan is in place. So if we think about it, what does that mean? Well, it means that we can't do like huge capital improvements that would change the nature of an asset whilst a loan is in place, because that's going to basically default us on the loan. We need to be very careful. So then we need to kind of be careful of what is just repairs and maintenance and what is a capital improvement, so that we don't fall outside of the loan. So for instance, if we were to buy something that was a house on a block, and we then demolished it and made it a duplex, and we've got a loan in place, that is not acceptable. We've changed the nature of the asset. So we can't do that if there's a loan in place. If there's no loan and it's all our own money, that's fine. But whilst there's a loan in place, we cannot change the nature of the asset. So we need to be very careful that we're just doing repairs and maintenance all the time, but we're not changing the nature of the asset. And that might require a technical opinion sometimes. We need to be careful. The other thing that it does throw up is when we're purchasing an asset, sometimes assets are on two titles. For example, sometimes when we purchase a property, there's the property and the car park, and they're on two titles. And that's not going to fly where there's a loan, because we can only have one loan, one title. So we won't be able to do that. We would need to get two loans for two titles. So there's a few different quirks with it. The other thing to be aware of is we have these very nasty things called NALI and NALE rules, which is NALI and NALE, NALI and NALE rules. And they're nasty because they're basically when a related party deals with each other. The ATO does not like related parties dealing with each other. But basically, if a related party deals with each other in terms of an SMSF and in terms of property, it basically taints that asset forever. And you think about tainting a property asset forever. And it means that it's taxed at the highest rate. And also, that would mean in terms of property, it means when it's sold, the capital gain will be taxed at the highest rate. So it just means we don't want that to happen. And when that might happen would be in the situation where, in terms of an SMSF, if we were to do work for ourselves. So simple example, if we did some sort of work of a significant nature that we didn't charge for, and there's a whole lot of new guidelines come out, but you would basically have to be licensed. So for example, a builder. So you'd have to be licensed, charging the public for that kind of work. And you did that work for your SMSF and you didn't charge the SMSF for it. So you need to be a bit careful of that. Always employ other people to do that kind of work, unless you're going to, unless you are going to legitimately charge the SMSF for it, in which case you have to be licensed, got your own ABN, charging the public for it. So you really need technical advice in that area because it is quite. So if you're not going to do that, just make sure that all the work that you're doing, you're getting, you're basically paying someone else for. So that is a danger area as well. Now, I'm just going to go back to Ashleigh. In terms of buying SMSF properties, does that information about what you can and can't do, does that kind of give you good information in terms of your property managers of what to look out for?
Yeah, I think it would be naive of investors out there to assume that their property managers would be experts when it comes to the SMSF and what you are required to do. I think that investors need to take responsibility and educate themselves and understand that to give the right advice to their PM, as opposed to assuming that their PM is the one that's going to educate them. I think you have to understand that that's not part of property management training. And property managers also don't know your personal circumstance either when it comes to these things. And while, like, some of us and myself, we have a good idea of it, we still also can't really give you advice. So what I try to educate PMs on is that to just do a soft reminder if it comes to, because a property manager will just say to an owner, hey, when the tenant vacates, I think you need to spend some money on the property, and they'll go get quotes. And then you've got an investor who maybe just follows the instructions, but no one's telling who. So I think, in an ideal world, yes, a property manager saying to an investor, listen, because your property's in an SMSF, you might want to go seek some further advice. And it'd be great to be in a world where your property manager is going to let you know when the time is that you need to go get further advice from someone. But that is going to be a minute minority of property managers. So you need to take full responsibility, because we're just going to tell you what the property needs, and we expect you to work out what you're allowed to do and what you're not allowed to do from a legal and tax point of view as well. So I think that it's, this is why you need to be buying decent quality properties. And if I was doing a pre-purchase inspection for someone who is buying in their super, I know what to look for. But, you would want to ask that question to a property manager. Do you have experience or knowledge on SMSF? Maybe before appointing someone. And I would be making sure that you are buying a property appropriate for that, which is why probably I'm getting the Yanchep and the Pearsall and those newer homes, saying that it's not saying they don't come with maintenance. They do come with maintenance, sometimes the newer builds more than anything, but they won't come with the renovation or the added works that you were talking about for, hopefully a good 5 or 10 years. So it's, so my tip is investors be educated. Don't rely on a property manager to understand your personal circumstance and your personal, purchase and requirements.
Yeah. And while I've got you, Ashleigh, I just want to ask you this one. When we're talking about having the correct name on the offer and acceptance, obviously I can't give advice on stamp duty. Do you also disclaim on that from, telling people what to put on the offer and acceptance as a real estate agent?
Yeah, see, I'm not in the selling space. So I would hope that, again, a selling agent, and I'm speaking on behalf of them with what I think is best practice, because I don't sell, but I would say that, again, it comes back to the buyer's responsibility. They need to be educated to know this. they can't assume that the selling agent will know or has experience in what the correct term, that is actually an investor's responsibility to, and so when I bought in my SMSF, even me personally, I still go to my accountant and I get an actual professional opinion of, please tell me what I need to, and also because there's timelines and timeframes, which I've discussed with you before, that you've got to take into account. So yeah, I don't rely on your sales agent to do that correctly. You go get proper legal advice on that, and that's what you put on your offer, would be my advice.
Perfect. Okay, well, we made it through the content, which I'm very happy about. We've got some questions, so I'm going to go through them and answer them, and ask my guests, my very special guest, to answer them as well. So the first question is this session recorded? That's an easy one. So yes, the session is recorded. If you would like a copy of the recording, can you just let us know and we will be happy to send it to you. So I've done that one. Now, next question. So I think this one's, I'm going to send this one to Ashleigh. Can you please also tell us any risk of buying commercial in comparing to residential?
I would say that, I mean, when I look at risk, I sort of look at the opportunity and the future of both commercial and resi. Probably not the best person to answer from a risk point of view on a contract. Things to consider, that's probably best speaking to a selling agent who specializes in commercial for that. And I would also be speaking to a commercial manager about what things that you need to be mentioning, because we've recently purchased a commercial property, and we had there was a sublease on something. So even us, like there was a risk that we didn't know we had in there. So I think making sure that, yes, dealing with someone who specializes in commercial is definitely the way to go, not your stock standard sales agent. Things that I've would say from a risk point of view, things that I would consider between commercial and resi, is that commercial is definitely going to be more of a long game, and where resi can potentially be short or long term. So, but commercial, yeah, it's the long game. It's going to be a very set and forget, but you are going to have potentially that lengthy vacancy period as well. But once you've got that sorted, it's going to be pretty smooth sailing and pretty solid, because you don't have to worry about expenses and all of that comes with it. So that's always a pro. With resi though, yes, it could potentially be a short-term or a long-term option, but there's more involvement. So you're going to have emotion involved. You're going to have, arguing about little bits and pieces. You're going to have a lot more involvement in resi. And to be honest, a lot of investors aren't cut out to be investors. They really, it's stressful. And, the number of arguments we might have with an owner about a kitchen tap that needs replacing because it costs them $200 instead of $150. I mean, like, we're talking about little stuff. So it's I think that, making sure you're emotionally equipped to be an investor is something to consider from a resi. I think that it also really comes down to things to consider is what you think of the future and where you see the future being with business and commercial property. And we don't know what that's going to be. I mean, someone might have the opinion of, we don't think commercial is going to be sustainable because more people are leaving offices and working from home. Then you've got maybe some people have an opinion that, no, we're going to need big spaces, commercial spaces, to hold big companies. But then, yeah, other people are going to say, well, maybe just smaller, because my truth is that, or my thought is that in the future, people aren't going to want big premises. They're going to downsize their commercial space. So I think everyone holds a different opinion on what the future holds for business in general, and then the need for commercial. I always try to get people to look at the big picture. I think if you are playing small and being an investor who's only got one property, you're going to be focused on just that, that one place, and you're going to be so fixated on that. But if you play a bit bigger and you have a portfolio, so for me, I've got a small commercial, I've got a large commercial, I've got a small resi, I've got a regional resi. It's if you start diversifying your portfolio and having a bit of everything, then you're looking at the whole picture and the whole portfolio and not being fixated on on one tiny thing. So, yes, there's going to be risks with commercial and resi, but to reduce those risks, if you have a bit of everything in a portfolio, then it all balances out at the end of the day. So that's sort of my ultimate goal for everyone. They should all have a new build. They should all have a old house that needs a reno. They should have a commercial. They should have this, one of everything.
Okay, next question is, I'm going to do this one. Is there a cost for moving property from a bare trust to an SMSF? So when we were talking about, when I had this, and we were talking about how here it is in the holding property, and when it's paid out, we can move the property to the company that's the trustee for the SMSF. Now, a couple of things to mention, a couple of really key things, really key requirements. Number one, that's why it's very important on the offer and acceptance that you make mention of the correct owner being the bare trust, because when you go at the very end to transfer it into the correct, well, not the correct entity, but you want to transfer it into the SMSF, you need to have the correct legal trail. So that's number one. Number two, this is key. One technicality, when you pay the deposit on the offer and acceptance, it must come out of the SMSF bank account. So sometimes people get ahead of themselves, and I don't know for what reason, but they want to pay it out of their personal money. If you do that, it's just a technicality, but it may trigger double stamp duty at the very end when everything's paid out. So you have to prove at the very end that the money came out of the SMSF bank account. So that's key. So we always double check with people, did the money come out of your SMSF bank account? Now, if it hasn't, it's even worth getting that money refunded and paying it out of the SMSF bank account. It's just a technicality. It's absolutely must do. Now, then what you have to do is you basically having the title transferred, obviously from the bare trust holding company to the corporate trustee, who's a trustee of the SMSF bank account. Sorry, SMSF. Now, what you're trying to avoid for this whole thing is you're trying to avoid stamp duty. You're trying to avoid there being a transfer from one entity to another. So the answer to the question is no, there shouldn't be a cost, as in there shouldn't be stamp duty. There may be a cost in that obviously you're going to have to get a settlement agent to do that transaction for you. And I'm not sure, because again, we don't advise on stamp duty and we don't advise on those transactions. So the settlement agent, there may be nominal stamp duty payable, and nominal, I think, is about $30. So it may be one of those nominal, I don't know. That's where you get their advice on that. But what you are trying to avoid is the stamp duty issue from transferring it from one entity to another. That is what you're trying to avoid. And that they're the technicalities that you have to make sure you've got the correct legal entity on the offer and acceptance, and make sure that the money for the deposit came out of the SMSF bank account, and then engage a settlement agent or legal conveyancer to do the actual transaction at the end, if you want it to go into that entity. Okay, so I've done that one. Now, next question. Okay. Let's have a look. Just trying to get through the questions, that's all, because I would just want to finish on time. How much do I need to start an SMSF as well as to purchase a property? Okay, we don't set SMSFs up under 200,000. So you need at least 200,000. Also, if you are considering doing anything like this, property with a loan, you would need a little bit more than that. Not a little bit more, but a bit more. Reason being, obviously, the LVR, you know, is going to be about 80%. So, you know, if you're looking at property of, you know, 600 to 800 would be, you know, about what you're looking at. So yeah, you'd need about 300 to 400 at least, if not more than that, if you're looking at that. So standard, if you're just looking at setting up an SMSF and you just want to do some shares, or anything else, there's a whole bunch of things you can do. You can do crypto, you can do shares, you can do cash, you can do anything. 200. If you're looking at doing property, more than that. So I've done that one. Because I'm just trying to do these quickly. Do you need to be registered for GST to purchase either a residential or commercial property? Residential, no. Commercial, so we don't register any of our SMSFs for GST. It's not worth them, not worth it. Commercial, yes. Generally, yes, you do. And even if you buy for a going concern, you have to be registered. If I set up an SMSF and later decide it's not the right fit for me, is it possible to revert to traditional super fund? Yes, it is. You set up the SMSF and then you can roll back out. Do I recommend doing that? No, I don't, because it's quite a expensive process. It's probably going to cost you, look, up to maybe 10 grand to have gone through that process of doing that. So if you want to spend 10 grand doing that, you can do that, but I wouldn't recommend it. Okay, done that one. Oh, Mo says, thanks, Ash. That's nice. Okay. Have I done them all? Okay. Here's one for Catherine. Is it expensive to do a loan in an SMSF?
Setting up the loan itself, depending on whether it's residential or commercial, it's probably about 6% of the property value is what I would estimate it to be. And that's including your stamp duty and everything as well. The difference being commercial properties, you will always pay a much higher valuation fee for commercial, depending on the commercial property. So commercial valuations could be anything from $1,500 to $3,000, which is a much more added expense. The loans themselves, the interest rates that come with those, with the self-managed super fund loans, are more expensive. At the moment for residential under 80%, you're probably looking around the 6.6% at the moment. And then commercial is more probably around the 7% or the low 7s. So they're obviously more commercial rates. So yes, it can be, it's more expensive than setting up your own home loan. Yeah, I would estimate around the 6% of the purchase price plus valuation fees.
Okay, perfect. All right, well, we're going to finish off there. We're right on time. I want to thank very much my two beautiful guests today. I want to go across to Catherine and just ask her to finish off. Let us know, how can we contact you? How can we get in touch? What can you offer us?
Thanks for having me. You can call me on 041 904 3428, or email me at catherine@vitalityfinance.com.au. I'm happy to answer any of your questions, run through the different scenarios with you, whether it's for your self-managed super fund, or your current investment loans, or your owner-occupied loans that you've got now. Happy to have a chat. Thank you.
Thanks, Catherine. And Ashleigh, I just want to go across to you. How can people get in touch with you, and what services do you have?
Yeah, so I work for SoCo, or own SoCo Realty, so you can email me at ashleigh@socorealty.com.au. So not only do we do property management between Mandurah and Yanchep, we also do specialise in pre-purchase inspections for clients. So if you are thinking of buying, then I would always encourage you to reach out to me and let me do your online assessments, which are complimentary, cost you nothing, to give you an on-the-ground expert opinion on that property for you. And then if I need to, I can help you go through the property on your behalf. If you don't live in Perth, I can help go through and do that and provide you an opinion of the property if it was, basically being your eyes and ears on the ground.
Perfect. Thank you so much for being my very special guest today for the webinar. And if anyone wants to get in contact with me, my email is susan@susanoconnoraccounting.com.au. If you want a recording of today's webinar, please let us know and we'll be happy to send it to you. And I have a little ebook which is $15.50 on the website www.susanoconnoraccounting.com.au, which I've just completely rewritten and updated for 2025 if you want to purchase that. And it's goodbye from us until next time. See you later. Bye. I don't know where the end is.